individual stock performance.
All right, that is some important global market opinion that we are tracking. But let's now talk about all of the cues that you should track as we get into a fresh trading session. We have our research team here with the trade setup, as well as the individual stock names that you should have on your radar today. So we have Rima, Nigel, as well as Vivek joining us. Good morning, guys. And Rima, let me come across to you first. We did see a good close yesterday, but looks like perhaps we're at least starting on the back foot today.
Absolutely. So yesterday was a good session for our markets. The benchmark indices pushed higher. We gained close to about 1%. Though in the second half of the trading session, the markets couldn't build on the gains the indices had. So they kind of flatlined, gave up about 30 points from the top of the trading session. We are approaching resistance zone. So the 100-day moving average is at 17,945. The budget day high is at 17,972. So around levels of 17,950 plus or minus 20 points here and there. There is resistance, resistance for our markets. This morning, the SGX Nifty is suggesting a slightly muted start, but we are closer to the upper end of that trading band, but the trading band very much remains intact. Now, the Q3 earnings season is over, so the focus is going to go back to the macros and flows. Markets will react to earnings from ONGC, Apollo Hospitals, Siemens, NMDC, Biocon, a whole host of mid-cap earnings as well. The trade data will be released and reported at 5:30 p.m. India time, so watch out for that. The FIs bought in the cash for the third consecutive day. The FIs yesterday bought 1,300 crore in the cash market. The DIIs bought 204 crores. So net institutional figures were a buy to the tune of 1,500 crore rupees, and this is a positive. Third consecutive buy figure by the FIs in the cash market. The US markets, as you pointed out, closed mixed. The Dow lost about 150 points. We've been tracking and talking about the US CPI inflation print at 6.4%, ahead of what economists were saying, and the road to bringing down US inflation is going to be long and bumpy, as Steve Leisman was indicating. So that's going to be the big talking point. But back home, focus on macros and flows. The FIs turn positive, flows turn positive. That's a big, big deal for our markets. But we are inching towards the upper end of the trading band. Can we break out of it? That remains to be seen. Back to you.
All right, so let's see how the trading session pans out and if we can indeed break out of that trading range. Rima, thanks a lot for that. But let's now talk about the individual stocks that we should track today. We have Vivek with the entire list. Vivek, pretty much the last of the big earnings coming through and not really looking so good.
Well, absolutely right. Whole host of numbers declared results post-market hours yesterday, and it's been the last set of results as far as this particular earnings season is concerned. So first on our list, ONGC, largely inline set of results. However, profitability did see a bit of a miss due to lower other income. Apollo Hospitals, a muted set from the company this time around. Profitability coming in below the CNBC-TV18 poll at 162 crore versus the expectation of a little over 210 crore. Moving on to Vodafone Idea, the losses here continue to mount, and losses actually have widened on a sequential basis as well, coming in almost at 8,000 crore rupees. However, sequentially, there has been an improvement as far as the average revenue per user is concerned, coming in to the 135 rupees. However, it significantly lags peers like Bharti Airtel. Also, keep an eye out for PI Industries, a good set of numbers from the company this time around. There's been a bit of a diversion in the fact that the domestic business hasn't done very well, but significant margin expansion seen in the other businesses. EBITDA coming in over 410 crore this time around. Bata has been a weak set from the company this time around. Profitability coming in around 83 crore rupees versus the expectations of almost 125 crore rupees. Margins too coming in much below what the street was anticipating. Torrent Power, good set of numbers, largely aided by a one-time gain as far as the gas trading is concerned. However, revenues too have grown significantly on a year-on-year basis. Profitability coming in close to 685 crore versus 368 crore on a year-on-year basis.
All right, Vivek, thanks a lot for getting us the roundup of all of these stocks that we should watch. We're going to keep all of these on our radar today. And finally, it's over to Nigel, who's tracking all of the cues from the futures and option space. Nigel, Rima was also just talking about, the FI flows and how they bought for 3 consecutive sessions. But take us through everything we should track.
Well, that's right. FI is showing us some love finally. 3 sessions they are buying, and have they turned the corner? Because yesterday there was a big short covering bounce that did play out, both on the Nifty as well as the Nifty Bank. You saw both those two indices surge up, and there was big open interest that came in lower. So that told you there was a big short covering bounce that played in, and that perfectly ties in with what the FIs did in the F&O market. They covered 34,000 short contracts in a single session. They added close to around 7,000 longs as well. So that's what resulted in a drastic change in their short positioning. They were at around 80 to 83% odd. That's come down to around 73% in just a single trading session. And the swing factor is around 40,000 contracts because 34,000 short contracts covered out and 7,000 long contracts have been added. Now, moving to the options space, well, yesterday there was a lot of unwinding on the options that were bought earlier. But what's heartening to see is the way they wrote puts in yesterday's trading session. They wrote close to around 79,000 put contracts, which is telling you there is a bit of a base for the markets, at least in the near term. And the calls that were getting written aggressively, well, they got covered out in trade. And what was getting covered out yesterday? 17,800 call, 17,900 call. And after a while, we saw this sort of calls that were written, they got covered. And on the put side, 17,900 put as well as 17,800 put, both of them were getting written. So that brings us to the crucial levels we're looking at. Yesterday, we ended, quite close to around that 100 EMA odd. So in the near term, that resistance zone could be around 18,000 odd. But given that we like to start off on the back foot, and given that we did see writing at around the 17,900 put, I'm counting on that 17,830 odd level. That'll be a crucial stop loss, a crucial support level for today. SGX Nifty suggesting a pullback. I don't think that's such a bad thing. Maybe you get a bit of a deeper pullback, and that gives the bulls a perfect entry to get in. Basically, there appears there is some unfinished business on the upside. Let's see whether or not it does play out.
All right, we will see whether that plays out or not. Nigel, Rima, Vivek, thanks a lot for joining us and prepping us up for this trading session. With that, it is time for our first short break on the show. But on the other side, like we told you, Air India has announced its largest ever order as it is set to buy 470 aircraft from Airbus as well as Boeing. All of the details on this story when we come back.